Hello there, future entrepreneurs. Are you dreaming of starting your own business but feeling a bit lost in the sea of information? Wondering how to not only start but also expand your business globally right from the Philippines? And on top of that, trying to figure out the best business structure for you? Well, you've come to the right place. Now, let's dive into our first big question for this video. If you register your online business in the Philippines, can you operate globally? The answer? Yes, you can. You can operate your online business globally once it's registered in the Philippines. The digital nature of online businesses allows for broad international reach and operations regardless of the physical location of your business registration. However, as a caution and a reminder, you have to take note of the following and check their consequences in relation to the business that you are operating. In short, depende yung requirements ng businesses sa structure ng business na napili mo. So now, there are different kinds and structure of businesses, and depending on the kind of business and your company structure, you might want to watch out for the following. 1. Compliance with international laws and regulations. You must comply with the legal and regulatory requirements of each country you operate in, including data protection laws, e.g. GDPR in Europe. So if you have clients or customers from Europe, you might want to check on that. Consumer protection laws, and specific product or service regulations. Next, tax regulations. Understand your tax obligations both in the Philippines and in the countries where your customers are located. This might involve double taxation agreements, VAT on digital services, and other tax liabilities. Next, payment processing. Be prepared to handle multiple currencies and comply with the regulations of different countries regarding online transactions. Next, shipping and logistics. For physical products, international shipping involves customs, duties, and varying shipping times, which can impact customer satisfaction. Another one which is very important is intellectual property or IP. Ensure your business name, your brand, your products are protected internationally to avoid IP conflict. Next, cultural sensitivity. Different people, different backgrounds, so just be aware of cultural differences that can affect your marketing and sales strategies. Now on to the second question, which is better? Is it sole proprietorship or one-person corporation or OPC? Choosing between a sole proprietorship and a one-person corporation depends on various factors, including liability, taxation, and compliance requirements. Which one is better? Let's discuss. We shall discuss the advantages and disadvantages first, the comparison between sole proprietorship and one-person corporation. All right, let's start. Now to start, a sole proprietorship is a business owned and operated by one person. So that one person has complete control over all decision-making regarding the business. On the other hand, OPC is a business structure that allows a single person to incorporate a company as a separate legal entity. This means the corporation is separate from the owner and can enter into contracts, own assets, and incur liabilities in its name. The owner of the OPC is called a single stockholder and is the corporation's sole owner. Now, on management, it's faster and easier to set up and manage a sole proprietor versus an OPC because yung legal and capital requirements, the sole proprietor is, how can I say, simpler and easier than that of an OPC. For example, if you have an OPC, you are required to submit an annual report for meeting yung stockholders meetings and stuff to the SEC, and it's an annual requirement. Whereas if sole proprietorship, hindi na siya kinakailangan. Now, moving on, as to liability, in sole proprietorship, the owner has unlimited personal liability, meaning personal assets can be used to satisfy business debts and liabilities. So, kapag nangutang si sole proprietorship, yung utang niya pwedeng singilin sa may-ari ng business ng sole proprietorship mismo. While if OPC ka, you have limited liability protection, meaning the owner's personal assets and the OPC, they're generally protected from business debts and liabilities. So, yun yung kagandahan ng OPC. That's one of the advantages. Okay. Now, as to taxation naman, si sole proprietorship generally subject siya to graduated tax rates from 0 to 35%, with an exception should it be taxable, yung taxable income niya fall below 250,000 pesos per year. Now, they also have the option to waive of the 8% tax rate if yung revenue niya does not exceed 3 million pesos. So in sole proprietorship, the income is taxed as personal income, which can be simpler but might also result in higher taxes if the business income is substantial na. Yun yung disadvantage niya. However, with OPC naman, yung corporate tax rate niya is 20 to 25%, depending on its assets and taxable income for the year. So si OPC, subject to corporate tax rates, which could be advantageous or disadvantageous, depending on the business's income and expenses. Yung advantage niya here is that it actually allows for more tax-deductible business expenses. Take note, however, that both entities can deduct certain business-related expenses. So, there you have it. Now, as to ease of setup and maintenance, sole proprietorship generally easier and less costly to establish and maintain compared to a corporation. Which si sole prop then, it requires fewer compliance and regulatory requirements, as you can recall a few seconds ago we've discussed. While FFC OPC, it's more complex and costly to set up because it requires compliance with corporate governance standards, including annual submission of financial statements and other corporate filing. So, now, as to control and accountability naman, si sole proprietorship, in terms of control, the owner has complete control over the business decisions and operations. That means they have full decision-making and are entitled to all profits the business generates. However, the sole proprietors are also liable for all the debts and obligations of the sole proprietorship. So, since only one person has full control, raising capital from outside investors may be more complex and it can be challenging for the business to expand. Now, with OPC, on the other hand, OPC is a legal entity. Legal entity separate from its sole stockholder, so it's easier for the corporation to enter into legal contracts, invite investors, and expand. So, in addition, it can continue to function even when the founder is no longer with the company for whatever reason, because it has its nominee and alternate nominee or appointed the funding corporation to manage the business operations in the absence of the sole stockholder. So, in short, If si sole proprietor, sole proprietorship, let's say lang, God forbid, nag-pass away, si sole proprietorship will no longer be. But if si owner ni OPC passed away, meron siyang nominee, meron siyang appointed person. So even if that original owner, let's say, passed on, the OPC can still continue, may still continue. All right. So which one is better? Is it sole proprietorship or is it the OPC or the one-person corporation? The answer? It really depends on your business needs, your risk appetite, and how you plan to grow. If you're leaning towards an easy setup and don't mind the risk, sole proprietorship could be your go-to. But if you're thinking big and want that extra layer of protection, then the OPC might just be your best bet. Are you ready to take the leap? Let's walk through the step-by-step process to get your online business off the ground right here from the Philippines. To start with, the first one is to develop your idea. Find a niche you're passionate about and validate it with market research. 2, business plan. Craft a solid business plan outlining your vision, market strategy, and financial forecasts. Next, choose your structure. Decide if you would like a sole proprietorship, an OPC, or a stock or non-stock corporation based on our discussion a while ago. Next, register your business. Get your business name registered with DTI or SEC depending on your structure. Next, comply with legal requirements. Secure necessary permits from the barangay, city hall, and register with the PAR. Next, set up your finances. Open a bank account and set up your accounting system. Plan operations and logistics if you're selling products. Figure out your supply chain and delivery process. And market your business. Create a strong online presence through social media, SEO, and possibly paid advertising. You can also create your own website or market in Shopee, Lazada, and other apps and platforms. And then launch. Get ready, set, and launch your business with a bang. When making your decision, consider consulting with a legal or business advisor to tailor your choice to your specific needs and circumstances. And there you have it, folks, a roadmap to launching your very own online business here in the country. Ready to take on the world? Well, remember, the journey of 1,000 miles begins with a single step. And in your case, that step could very well be in the foundation of a global business empire. Thank you for joining me today. If you found this video helpful, please like, share, and subscribe for more insights. And don't forget to comment below with your thoughts, experiences, or topics you'd like to see discussed in future videos. Together, let's build better, beautiful lives. So I'm Stella, signing off. Stay informed, stay kind, and see you in the next video. Ciao!